Hey guys, hope you're having a brilliant day. Hope everything is well. Welcome to the market recap of the YTK group. I just wanted to run through the trades which I took last week, which managed to result me into getting around a good 850 pips. So I had a fantastic week in the market and 3 out of 3 wins on all the trades. And it's good to see price managing to play out on majority trades, and they're all giving out as signals as well in the group. So it's good to know the fact we all made money together. It's good to know price managed to play out in a manner that we were hoping to play out. So I can't really complain about that. So I want to give you the run through of why I actually took these trades. First and foremost, the real reason why is because if you have a look at the Dixie, which is USDX dollar strength, I took into consideration order flow of the pair. So first and foremost, I wanted to show you on how I managed to approach the market with this type of trade. So as you can see, price manages to create these higher highs and higher lows. So it's currently having its structure of price. So price created a new higher high, price created a higher low, price is on its way and now it's created a higher high. So my belief is the fact that I did put in a market review for a lot of my mentees was that my ultimate target on a Dixie is actually this key supply zone of the 99-130 region. This last bullish candle which pushed price lower, that key level of resistance. I think it's gunning for that particular point. So what I'm expecting on price is what I'm anticipating on price is for it to reach that significant key level and eventually reject. But as you can see, price has been working with key levels of supply and demand, with blocks and breakers being respected in many levels. This is the last bullish candle to push price lower. This key breaker forms a key level of support for myself, as well as this bullish order block, this down candle which pushed price up. So this was where the higher low formulated before finding the key support zone of this level of 95 of the 95 region. So price dipped into that, found support, and managed to push up towards the upside, creating a formulated new higher high before the higher low and before the next higher high. My ultimate targets last week was actually the previous month's high. So as you can see, the high of 98,040 was the ultimate target. So as I managed to look at price, we were already above the monthly open of 97.157. So 97.157. So we're already above the monthly open, and we also had this key liquidity point in price, which was my ultimate target, which we managed to smash. And the ultimate target was the 98.04, so it was the high of April. So on a weekly, price was creating very, very key levels in terms of looking at, for example, structural bias and also respecting key levels of blocks and breakers. So price managed to use this monthly breaker as a key pivot zone. So price managed to dip into it, break above, support, rally to the upside. But it's funny how price managed to find key levels of support of breaking structure towards the upside and literally coming back into key levels of demand on a weekly. So price managed to find support at the 95,680 region, came into EQ of this weekly order block, this key demand zone, pushed price higher. And as you can see, we broke in structure after closing above this liquidity high of the 97.7 region. So as you can see, we closed above that significant high and formulated a new higher high. So this is the last down candle which pushed price lower. And as you can see, this is the last bearish candle which pushed price higher. Price managed to find key support in that significant zone, created a little bit of a swing low fractal of this low, a lower low, and then a little bit of a higher low as price swung up to the upside. But it raided liquidity below the significant weekly low of the 96,860 region. So with 96,860 region, price managed to raid that significant low. And as you can see, this was the liquidity high that I was expecting price to be able to raid. So as we go on to daily, I was looking at price as we're dipping into the significant key level. Price managed to came into this last bearish candle which pushed price higher. So where did it come in towards? It came into this down candle which pushed price higher, raided that significant low, and literally ran towards the upside. And look how aggressively price managed to raid that significant level. And let me show you the before chart on the Dixie, what I was looking at. And I'll give you a brilliant example. This was a chart that I was putting up. So this is the key level of the monthly open, price being above the weekly open and rating at significant low. This is a swing low fractal in the weekly demand zone of that weekly breaker. Price managed to come into them levels, create stops above this significant high, create further stops above this significant high, and also this significant high. And as you can see, the end result of that significant bias was price breaking above these significant liquidity points and hitting our points to the target of liquidity to the absolute pip. And if you can see, this is with the previous monthly high that was rated. So I kept that bullish bias in mind. So obviously, naturally, I was looking at myself in a perspective where I wanted to take, for example, further shorts on, what's the word called, on significant pairs. For example, I wanted to take shorts on oil and I wanted to take longs on USDCAD. USDCAD was probably one of my favorite biases on price. The reason why I'd say that is because with USDCAD, its order flow is very, very beautiful and clean. As you can see, price managed to break structure towards the upside in terms of its higher highs and higher lows. If I bring this channel across, just for you to identify order flow, you can see that price managed to create a new higher high, price created higher low, price created a higher high, price created a higher low, and price created is about to create a new higher high. And I did mention to people that was in my trading group that the liquidity high, which I really wanted to look at, was these two liquidity pool of stops, which are above these monthly highs of the 136,630 region. And also a key level for me is the 136,650 region. But price is very, very repetitive, which is quite nice on a monthly. Because as you know, price broke structure to the upside, closing above this liquidity high. This was, as you can see, this was the last bearish candle which pushed price higher. Price managed to close above this liquidity high of the 1.33860 region. And as you can see, this was the last bearish candle which pushed price higher. This came into the wick of the block, managed to create a swing low fractal below the significant lows over here, where price created a lower low and then a higher low, and it managed to rally towards the upside. I did mark out the monthly opening price, where, for example, you have the 1.33870 region. 0.33870 region, perfect. So it was above the monthly open. Order flow is very, very bullish. On a weekly, it shows that there's been a lot of accumulation and distribution on this significant pair. You see how price managed to find key support at this weekly breaker. That's within the monthly zone. So price managed to find key support in that significant level. Price managed to create another higher high, breaking above the monthly open of 1.33870. So we managed to close above this liquidity high of 1.33750 and come back into the weekly block, the key demand zone. So price managed to find key support. So similar to the market maker buy model, where you have, for example, accumulation, distribution, retracement, reversal. So price managed to find liquidity below the significant level and carried on raiding liquidity. So if you grab this, you see how price was consolidated in that key area of accumulation. So what happened? Price managed to break structure to the upside, closing above this liquidity high. So as we saw price break above the liquidity high, I saw this as a breaking structure after price managed to close above this significant key level of 1.34510. So price closed above that level, creating a new manufactured higher high respecting structure. And all I simply wanted was a return back into a weekly demand zone and its down candle, which pushed price higher, this weekly bullish order block, a retest of the monthly open, and a raid of the previous week's low. So as we raided the previous week's low, we came into EQ of the weekly breaker. So as we raided the previous week's low of 1.34000, price managed to come straight into where? This down candle which pushed price higher. So I marked out this significant key level where this was the last bearish candle which pushed price higher. So price accumulated in that zone before, dipped into it, expanded, dipped into it, expanded, dipped into it, expanded. But it dipped into it the third time. I was a bit reluctant to take this trade because of how many times it dipped into the key level of demand in that specific zone, because the more times that them specific zones manage to get touched, that it's less reliable for it to manage to hold because it's being constantly tested. So price managed to come into this weekly order block, this down candle push price higher. So as you can see, it dipped into the order block. I wanted a raid of all of these liquidity lows. Liquidity low on the daily of the 1.33840 level, and also the liquidity low of 1.33770. So price managed to raid them specific lows. So the liquidity was taken and neutralized. So as liquidity was neutralizing at significant level, you can see this was the last bearish candle which pushed price higher. This is the last bearish candle which pushed price higher. This was the level which I managed to buy from. So as you can see on an hourly, if I really wanted to refine my stops, I could have bought from EQ of that specific block, but I didn't trust it. So I literally bought straight from the block. So I managed to hold price. As soon as it dipped back into that level, news managed to inject in that significant key level. And after that, it was the easiest 150 pips which I've taken. And where did I manage to take profit? I did say that I was looking for liquidity above the equal highs of this significant level over here. These two key levels was very, very significant for me. And if I was going to continue holding USDCAD, I would have held up to back up to this weekly supply zone of this weekly bearish order block of 135,650, and my ultimate liquidity targets, because of the accumulation of there's lots of stocks resting above, of 135,200 level. So that was my TP. But I managed to close price as soon as it came into EQ at the 4-hour block, because I knew it was going to provide some sort of retracement, especially this 1 hour breaker. You see this breaker on this block? So you have a bit of a double confidence there, dipped into it, and then it rejected. But as soon as it dipped into it, I was already out of the move. So I was more than happy in taking my 140 pips on price, you know, because I didn't want price to come back and retrace. And it's always good to be able to secure your money in a market. But also gave me further incentive to look at CADCHF. I've never really traded this pair. But what I liked about this pair is the fact it's in a very, very nice range in price. So you have the range low. And then let me mark out these key levels. You have the mid-range and you have the range high. So price has been in a massive accumulation since literally 2014 November, and we're in May 12, 2019. For a 5-year period, you have this key consolidation of these. You have the mid-range, you have currently the mid-range in price, you have the high of the range, and you have the low of the range. So what I managed to do was I marked out, for example, where price created a very, very significant break in market structure as we managed to close below this significant low. So after we closed below this significant low of 0.73150, this was the last bullish candle which pushed price lower. So price dipped into it, and it managed to raid the liquidity above this liquidity high of the 0.75880 region. So it created a bit of a key resistance and price struggled to break above it. It dipped into it and it came into the body of the block, carried on finding resistance and then failed. And 0.76117. So already was 0.16120. Let me put that down. So we're below the monthly open after breaking structure downside, creating a new accumulated lower low. I'll call it accumulated lower low purely because of the fact that price is actually in an accumulation and we haven't actually seen a significant lower low, but it did close below this liquidity low. So I will show that as a minor accumulated lower low within this price range. So I was going to use this mid-range as a target. So as you can see at the moment, this was the last bullish, as you can see, price mentioned this is the last bullish candle which price lower. See, within EQ of this weekly block, that's within the monthly. So price managed to find key support at the above the monthly open of 0.161 and 0.76 76120. So price came into EQ of this significant order block after breaking structure towards the downside, even on a weekly below this liquidity low. So it closed below this significant level of 0.75530. So price dips into it, rejected. Price dipped into it, rejected. And order flow for me towards the downside, coming towards the mid-range, was bearish in the past few weeks. So what I intended to do was, after price created this swing high fractal period, a high, and then literally swang towards the downside, I was looking for the play to occur on the daily. So for me, what occurred for me was the fact that when you're aligning with order flow, we managed to break structure towards the downside and create a new lower low. Barely found any support in this block. It did the first time, but then it managed to smash through. And this was the last bullish candle which pushed price lower. So my intention was price to create a new lower low, breaking structure towards the downside below the 0.75 region. So, and I wanted it to come back into this daily order block. So it came back into the daily order block and come back into the mid-range. So as I saw price dip into the mid-range, what I did was I sold straight off this 4-hour block into here. So it came very, very close to my stop. So I had like a 25 pip stop, 100 pip gain. So it was a nice 4-hour trade. So it just goes to show, if I really wanted a better risk to reward, what I could have done was waited for a better play, like a stop run on price. But I was a bit impatient, and when as a swinger, you don't really have as much patience sometimes. You don't really have the intraday thing going on, to be honest with you. I could have waited for a stop run and then a retest of this breaker right before the hourly sell-off. So I could have had like a 13 pip stop and then took a 10R then and there. But I managed to take my 4R for a limit trade. So I'm just glad to know that CADCHF managed to play out the way I envisioned. On top of that, so onto knowing the fact with currency correlation, I managed to take profit at the weekly liquidity low. And the low that I marked out on this significant level was this level over here. So I did mention in the group that the 0.74500 is the level that should be where the take profit is. We managed to take profit a bit earlier, but we wanted to secure the lion's share of the move. And as a good example, here's the actual picture. So you can see that this is a liquidity low we're aiming for. This liquidity low, this is 7.4500 level. Price broke structure towards the downside. This was the mid-range. Price came into the EQ of the block, rated the high, and then you see, and now you'll be able to see the result of that significant trade. Let me see where it. Okay, here it is. Boom. And that was the easiest 4 to 5 hour trade. So it's sent out as a signal once again in the group. So it just goes to show that once you can apply the principles in price, the rest is just a follow through. So also going back to price, I wanted to look at XTI USD. I should have, to be honest with you, held towards my target of $60 a barrel. But to be honest with you, with the way price was looking at for me on oil, my emotions probably got a little bit better with me. I can't lie to you. So let me go on a monthly and let me show you why I actually shorted oil as well. As you can see, with oil, we've had this massive, you see this massive move? That's cool, where you have these 3 months of aggressive price action. So oil had a very, very aggressive sell-off. So as oil managed to sell off, I was thinking to myself, we've broken structures toward the downside, taking out a previous higher low. We managed to close below the significant low of 58, of the 58 region, and we have a very strong close of the breaking market structure, creating a new lower low. All I wanted is a return back to our block. On a monthly, this is the last bearish candle which pushed price higher, so it's a breaker. I was hoping it would come into the order block. It didn't come in, but I was thinking no problem whatsoever, because if it finds resistance at this key supply zone of the key supply zone or the 0.6570 region, then I'll be looking for shorts. So this was a return at a point of origin return. So as you can see at the moment, I also marked out the monthly open of price, which was 63.30. So we were below that already. 63.30. That's cool. So we managed to break below that significant level, retest that specific breaker. Coming to the weekly now, we managed to, for example, come into this specific key zone. You see this weekly breaker where you have the down candle prior to the up move, price broke structure to the downside, came into EQ of that specific level, and price managed to create a swing high fractal on a weekly, create a high, and then a swing. Liquidity stop rate created a key level of resistance above that significant level. Price is about to create its higher low. It came into a key level of this weekly block. Well, that's what we're in now. This was my actual target. I did mention it in the previous market review. So none of this is actually hindsight. And I did mark out the weekly open of 63.20. So our previous week's low, so we're below the previous week's open, which is when I actually took the trade. So what happened? Price managed to break structure towards the downside over here. You know, actually, let me mark out. Actually, wait, it didn't break market structure. What we're talking about, it returned to a block. That was it. It returned back into this block. From price managed to break structure to the downside very narrowly and come back into a block. Raided the previous week's high. So we raided this specific high, and then it got raided. That specific weekly high of 63.6 got raided as well. So on a daily now, you'll be able to see it in a better motion. Let me mark out these key levels. Let me get rid of all these levels. So the price was working beautifully, especially in looking at the dynamic levels of support and resistance. So I just used SNR to also help me in identifying where the best price levels are. So there's liquidity below this below the significant low. So 60 is the target. That's where I said that I wanted to look for price. So the stops was resting below that significant level. So because it found support at this bullish order block on a daily. So price was working within its ranges once again. So what I was doing, I was marking out just key SNR lines. So as you can see, price managed to break structure towards the downside where we created a new lower low. You see that? We have a bit of accumulation above this significant level. Accumulation, distribution, broke structure to the downside, came back in, broke below, created a new lower low, breaking structure toward the downside, closing below this liquidity low to 62.2 region. As you can see, this was the last bullish candle, which pushed price lower. I sold it nearly 3 times and I got stopped out at break even, holding towards the 60 region. That's why I managed to get the emotions get the better of me, because I did manage to take a good 200 pips on 2 positions, so 400 pips in total. So I didn't want to get greedy, so I wanted to secure my profit and be on my way. And the reason why that is because it dipped in, accumulated, took me out at break even. I took it again, and I put if you're wondering what my entries were, the first one I took at this 4-hour breaker. So it was about a good, for example, so I used it about 60 pip stops. It was about 3-hour up, expected to hold to price, took me out break even. Came back in, used this order block to enter this time when it came back into the daily order block. And it just became quite frustrating. Price is just simply not going to its target. So it just kept on accumulating. And I see some big boy traders that were on Twitter, for example, who are all long oil, etc., etc. So, and that's another thing I want to guys let you know. Don't ever let anybody influence your decision in looking at price, because at the end of the day, the confluences that you're seeing are the most important ones. So don't be easily influenced by any person in the market other than yourself. You're the only person you should listen to. Unless you have viable confluences into believing why a trade idea is invalid, then fair enough. But in this specific case, I stuck to my guns. So what I did was I managed to short straight off, for example, this 4-hour block up here, but I put my stop above. So the reason why I put my stop above is because it's above the daily block, but it came into the 4-hour candle. This last bullish candle pushed price lower. So price managed to create the swing high daily fractal. So I managed to take profit at this entry, you see this stops are resting below the significant low. So we have the stops resting below there. That's where I managed to take profit and price. But then it managed to smash through my target and then eventually go towards a weekly weekly support zone, which I did mark out on my market breakdown for my students, and it hit it to the T and rejected. And I think that's where the higher low is. So I think we might be going long on oil soon. So it just goes to show the fact that, for example, you can see where the key level zones are in price. All you really need to do is understand what you're looking for in the market and then literally just play it into your hands. And I hope you guys found this video very, very insightful. If you want to hit me up with any type of questions or anything on Twitter and also on Instagram, I'm back active on Twitter, which is pretty good as well. You can hit me up in the DMs. So just whenever you guys wanted to have a bit of a chit chat, or if you guys wanted to have any questions trading related, I'm your man, so hit me up. And I'm always going to respond, so it's all love, man. I hope you guys have a brilliant week in the market. It's nothing but love, and I hope this weekly recap has been very, very beneficial towards you.